Here to break down the headlines are Bill Griffith, Kate Rogers, and Eric Chemi. Welcome to everybody.
Hello.
First up, we must talk some Wendy's. They're bringing back breakfast again. They're going to spend $20 million to roll out their expanded breakfast menu nationwide, guys, but investors aren't loving it. Check this out. The shares of Wendy's are down nearly 11% today. Both Credit Suisse and Guggenheim say it's the fifth time the company is trying to do breakfast. And Guggenheim cut Wendy's to neutral from buy, saying this rollout is going to hurt their earnings power.
Before we get the expert on this, let me just point out McDonald's is going high tech. Burger King is experimenting with fake meat, the Impossible Burger. And Wendy's is going back to breakfast. I mean,
stick to the basics.
Stick to what you've tried a 10-year-old solution that never worked to begin with.
Breakfast is supposed to be good. I've heard people that have fast food businesses, and they say fast food's so competitive. I'd love to just have a breakfast-only place because the margins are good. You can charge so much for eggs that are cheap.
Totally,
so what's the problem?
It's not a breakfast-only place. One other important part of the announcement is that they're hiring 20,000 people to help roll this out. So in the Credit Suisse note, they basically said this is a really tight labor market. You know, good luck trying to hire all of those people. And to your point about breakfast and it being good for business, Steve Easterbrook, the CEO of the biggest fast food chain, said this past quarter, yes, breakfast is good, but we have a lot of competition in the breakfast space. So if McDonald's is saying that, Wendy's obviously has a lot of work to put in to make this a success, but they have some interesting items. A chicken sandwich.
Chicken biscuit is a good one, I will say.
And there's a breakfast type Frosty, maybe a little heavy for the morning, but you never know.
Is $20 million even enough? I mean, I was struck in a way by they're hiring so many people. They have to get this right. There's going to be a huge marketing effort to go into it, and the investment's going to matter.
It still just feels to me like Apple bringing back the iPod or something, the original one.
Breakfast everyone needs. People love breakfast.
The world has passed them by.
This most important meal of the day.
You need to be innovating, not just rehashing something you did 10 years ago.
And why you can talk about this? Why did they fail so many times in the past? How come they can't get breakfast to work?
Right. So I believe that one of the issues was that it took a little bit of a longer time to make some of the things that they had tried in the past. Obviously, bringing on more crew members, if they're able to find all of these people and hire them, will help roll this out. But in terms of menu creativity, some of the new items do look creative. And also Wendy's is amazing at marketing. And
one final important thing to mention on this, which Mike Santoli mentioned, but the rub on the street for a long time on Wendy's has been this theory that all of their locations, they're not as prime real estate as McDonald's, so you have to take a left-hand turn to get into them. It backs up traffic. All I can say is, on my way in, the Wendy's are on the right and the McDonald's is on the left. Okay,
so which way you're coming from,
if they can get this right, but I do wonder about the real estate play in this as well. It matters.
Funny.
Location is everything. Moving right along, David Faber is reporting today that the WeWork IPO is still a go, with the roadshow set to kick off Monday. WeWork's largest shareholder, SoftBank, is reportedly urging the company to shelve the IPO because of valuation concerns. WeWork may also be looking to tap investors and raise money by issuing junk bonds. Let's get the very latest from Leslie Picker, because Leslie, this morning it didn't look so good, and now all of a sudden with Faber's reporting, is this roadshow still on track?
So it's unclear. To put it into perspective, they had a call last night. I was told by two people they had kind of an all-hands-on-deck meeting, WeWork and its advisors, trying to really nail down a plan. My understanding is that plan has not been nailed down yet. There are a lot of things that they have been discussing, including some changes to corporate governance to appease more investors. There are kind of loose plans for a roadshow. I was told that there was discussions about even starting as soon as the end of this week, although looking more likely that it wouldn't take place until early next week, as David had reported. But potentially it could be punted out further than that or off the table at all. Of course, the key factor here is SoftBank, their largest investor. They've already put $10.5 billion into WeWork. SoftBank, I've been told, doesn't want them to proceed with the IPO because it's looking like it will take place at a much lower valuation than where SoftBank had put money in previously. So if SoftBank were to come in and potentially provide some sort of private financing to WeWork to postpone this even further, that could be kind of another dynamic at play, which is why we're seeing so much in flux right now.
I wouldn't be surprised if this is a negotiating ploy on the part of the WeWork's folks to get SoftBank to come back with more funding at this point. What do you think, Leslie? I mean, come on. I mean, the fact that they don't, the plans for a dog and pony show are still so amorphous at this point. Wouldn't that suggest that they really don't plan to go forward with it? They're just trying to get SoftBank to come back with more money.
It's certainly a good question, Bill. And previously, SoftBank had wanted to come in and buy even more of the company and take control. And its LPs had said, actually, no, we're going to veto this plan. We do not want you to take control of WeWork. So the fact that they put $10.5 billion in privately to own about a 30% stake of WeWork, this IPO and concurrent private debt offering, it amounts to about $9 billion. So if SoftBank were going to try and supplant that, they would essentially be doubling down their investment in WeWork, which is something that their investors have previously kind of balked at. So I think it's a really hard bargain for SoftBank at this time. But WeWork is in a tough spot. They need the cash.
This has got to be the most controversial IPO in a very long time.
Yep.
No Leslie, thanks. We'll check back in with you soon. We appreciate it, Leslie Picker. Next up, a major possible blow to the gig economy, and we mean a major one. California state senators will vote on a bill that could force companies like Uber and Lyft to reclassify their independent contractors as employees in the state. The governor, Gavin Newsom, has already said he'll sign the bill. Uber, Lyft, and DoorDash have spent $90 million on a ballot initiative to exempt them from this proposed law, which could destroy the gig economy in California. We've talked about how much Uber and Lyft shares have underperformed. This is a major reason.
I mean, you're the expert on these topics, right? I just wonder if the
Thank you, expert on two topics.
Yeah, you're right. Unintended consequences. If they're trying to help the employees, or are they not? Are they just trying to get tax money because they know that if we make them employees, then we get the taxes directly from the companies rather than worry about 1099s and underreported?
And do these employees want it in the first place? I mean, all of these companies, now whether or not we believe them is up to us, but they say that these workers, they like the flexibility. That's the whole point of the gig economy. This undermines that.
I think we're missing a point here. I mean, we're talking as though you either have to be a contract employee or a staff employee. There could be a middle ground, I think, because not all gig drivers are created equal. Some of them, this becomes their full-time job, and they should become staff members. There are plenty of them, though, who this is when I've got a moment from my regular job, or if I'm out of work at the moment, you do this part-time. So I think there should be a distinction made on how these employees are treated based on how much time they do devote to the driving.
I do wonder, though, how much, I mean, so to what extent does that hurt the business models of these companies? You know, if just by having to classify drivers full-time, part-time, or what have you, is there availability? Does the availability pool go down? What happens to the economics of the business, period? I think that's a major question.
Their costs will definitely go up.
You're going to have to offer them health insurance to start. I mean, benefits.
Part-time, not if you say, okay, they're part-time employees, 20 hours, no benefits.
But then are they scheduling the drivers? I mean, it opens up so many questions. I would imagine they have to then, right, if you want to keep people part-time?
Up to 20 hours. Like, you could be part-time, do what you want, and then we knock you out at the end of the week. You never know how they might
So it upends the model.
And again, maybe not just that model, but others who depend on the gig economy for these kind of workers. And as they say, as goes California, so goes the rest of the nation. And speaking of which, the state assembly has also passed a bill that would let college athletes collect endorsement money. The Fair Pay to Play Act would allow college athletes in California to be paid for the use of their name, image, and likeness. It would still need to go through state Senate. It faces fierce opposition from the NCAA and the Pac-12 interest. Well, I mean, I guess that makes sense.
So it actually already passed the Senate, and then the Assembly passed it, but they made some modifications. So it'll go back to the Senate. But these are being voted on like 90% yes in California. The governor says that he'll sign it, or they can expect him to sign it. The idea is NIL, name, image, likeness. They're not saying that the colleges have to pay the players if you play in California. They're just saying you can go, you can play, and make all this side money. Sell autographs, get an endorsement deal, make appearances.
What happened with that UCLA player and that whole legal battle there that he was trying, because they were using his likeness, and he was trying to battle on that.
That's a separate thing, because that was in a video game.
I understand. So it was just narrowly because it was just the video game that's what he was after, not the whole enchilada.
That was a video game issue. Then there's other things where if you want to go and you want to sell autographs, you want to make appearances, right now you're not allowed to do anything, even if the college doesn't pay you. So the NCAA doesn't like this, but the state is giving them 4 years before the rule is in play. They're actually just hoping the NCAA will change their rules.
Has there been any sign that this will, has the NCAA been open at all to changing this? I mean, with all the pressure
they've been open by saying, look, we're letting it easier for you to transfer school to school if you want to get out of the school you are. We give the scholarship now, instead of it just being tuition, it's the full cost of attendance. So they're saying, look, we've made it better for students, but still within the limits that we control.
It will come as no surprise that I'm old school on this, that I wish we were back in the days when all university athletes were amateurs, and it remained that way, but the toothpaste is already out of the tube.
Read articles from 100 years ago. They were complaining about the same thing.
I know.
I'm old school. I say pay them. Why not?
Well, okay.